What's going on, everyone? Charlie here. We have a filing to talk about out of the NYSE. This is NYSE 2022-003, Listing Standards for Rights. Let's go and take a look at this. So this document is scheduled to be published on the Fed Register on February 2nd, 2022. This is a self-regulatory organization notice of filing and immediate effectiveness of a proposed rule to adopt a listing standard for rights. So the purpose of this, listed companies sometimes seek to raise capital from their existing shareholders by granting rights to subscribe for additional shares of the issuer's listed securities to all shareholders of record, AMC. The issuer may elect to make its rights either transferable or non-transferable and may wish to have transferable rights traded on the exchange. Historically, the exchange has traded short-term rights, i.e. rights with a subscription period of less than 90 days, pursuant to Section 703.03 of the NYSE Listed Company Manual, on an unlisted basis. And then Supernote 4 just says when trading unlisted short-term rights under Section 703.03 of the manual, the exchange relies on the exemption from Exchange Act Section 12A, which is registration requirements provided under the Exchange Act Rule 12A-4. Now, for purposes of proposed Section 703.12, the term rights refers to the privilege offered to holders of record of issued equity securities to subscribe, usually on a pro rata basis, for additional securities of the same class. Now, for initial listing, rights would need to meet the following requirements under proposed 703.12. Number 1, must have at least 400,000 issued. Number 2, the underlying security must be listed on the exchange. And number 3, at least 100 public holders of round lots must be present. Now, the proposed Section 703.12 would provide that the continued listing of rights is contingent. Otherwise, it's required on the underlying security remaining listed on the exchange. Listed rights cease to be listed on the exchange would promptly initiate suspension and delisting procedures with respect to the listed rights. In such case, the issuer of the listed rights would not be eligible to avail itself of the provisions of Sections 802.02 and 802.03, and any such listed rights would be subject to delisting procedures as set forth in Section 804. Now, there's two main differences from how this listing standard from the NYSE operates from the NASDAQ, and they are as follows. First, NASDAQ Marketplace Rules 5515 and 5560 require a listed right to have at least 3 registered and active market makers at the time of initial listing, and a continued listing requirement to have at least 2 registered and active market makers, one of which may be a market maker entering a stabilizing bid. The exchange has not included these requirements, that being the NYSE, as they are not applicable to our market model, in which the rights would be allocated to a designated market maker for trading. Second, the applicable NASDAQ capital market rules provide that a right may be issued if the underlying security is listed on NASDAQ or is a covered security, and will be subject to delisting if that ceases to be the case. The exchange's proposal provides that rights may only be listed as an initial matter and remain listed if the underlying security is listed on the NYSE and not if it is a covered security. The exchange has taken this approach to be consistent with its existing requirements for the listing of warrants, and also because covered securities listed on other exchanges are subject to lower initial and continued listing standards than are applicable to NYSE standards. So basically, what does this all mean? They're basically saying if a ticker symbol gets delisted, the rights to that also will be delisted immediately, basically. Buckle up.